In this video, we will do a cost of capital calculation. To find the cost of capital, we will click on the research on the home page and go into the valuation menu. Cost of capital is the first submenu in the valuation menu. We can minimize the submenus by clicking on the triple and double arrows. We will start with DuPont, letters DD, symbol DD, on the New York Stock Exchange. And the cost of capital is calculated through a series of steps. We will start with the beta, which allows us to calculate the cost of equity. We will use the financials to calculate the cost of debt and cost of preferred and pull this together into the weighted average cost of capital. We will use a 5-year period. We can also use the date picker if we choose to get current dates. With the beta, we're actually calculating how the stock behaves compared to the index. So we will calculate the beta for DuPont as it is compared to the Dow Jones. The beta of DuPont is 1.67 with a very high correlation of 0.86 for this time period that we've chosen. What this means is that if the Dow goes up 1, we expect DuPont to go up 1.67. Conversely, if the Dow goes down 1, we expect DuPont to drop 1.67. We will next calculate the cost of equity, or the cost of the company going to the public markets to raise capital. We will use a current risk-free rate of approximately 2.5%, an equity risk premium of 5.5%, and we will select additional premiums for industry, size, and company. These are all available to be edited as we choose based on the different companies that we're trying to calculate the cost of capital for. We will use those to calculate the cost of equity. So we can see with the build-up method, which basically adds up the different rates that we're dealing with, we get an 11% cost of equity. If we use the capital asset pricing model, we get 13.7. The capital asset pricing model actually uses the beta calculation that we did. The cost of debt is generated from the financial statements using the interest paid divided by the total debt, and we generate an after-tax cost of debt. The cost of preferreds are generated again based on the financials that we have, the book value of the financials, and we're getting a cost of preferred in this case of 4.76, or a weighted average cost of preferreds of 2.38. So the WACC, or the weighted average cost of capital, is the composite of the cost of equity, the cost of debt, and the cost of preferred on the basis of their percentage. You can see that the preferreds represent a very small percent. They're actually essentially zero. 72% of the capital structure of the company is in equity, 28% of the capital structure is in debt. So we have a WACC of 10.71, and we can save this WACC for DuPont.